Hello everyone, I am Lokesh, Assistant Professor, Department of Commerce, Soundarya Institute of Management and Science. Today I am going to discuss about unit number 3, trading in stock market. There are various topics we are going to discuss. The first one is different types of stock trading, trading and settlement in stock exchange, participators in trading and settlement in stock market, clearing and settlement process of stock market exchange. And finally, the following diagram or chart explain the clearing and settlement process at NSE. These are all the topics which we are going to discuss in this class. Let us move to the first one, the different types of stock trading. There are various trading in the stock trading or in the stock market. The various different types of stock trading are as below. The first one is day trading. It is a type of stock trading where both buying and selling of financial instruments is done. Here it includes the buying and selling both on the same day, and all the trading are closed before the market close for the day. The market will start 9:15, market will close exactly 3:30. Within the market closing time, I mean 3:30, that will be closed. Traders who participate in day trading are called active traders or day traders. Day trading demands fast decision and fast action. This type of stock trading is not advisable for a beginner or fresher. This is what day trading. Let us move to the second one, short term trading. A trade period of more than one day to a few weeks is considered as short-term trade, especially in the day trading that we have to buy on the same day and we have to sell on the same day within our closing time of the stock market. But when you come to the short-term trading, it will take from one day to few weeks is considered as short-term trade. Third one is medium term trading. A trade period from a few weeks to a few months is considered as medium term trade. Fourth one is delivery trading. It means if we buy shares today and sell them after one day, then the type of trading is called as delivery trading. I mean, if you buy today, okay, today is Thursday, if you buy tomorrow, I mean, if you sell tomorrow after one day, then this type of trading is called as delivery trading. The main advantages of delivery trading is that the fear for loss of money is very less when compared with intraday trading. In intraday trading, there is no option. You have to buy on the same day and you have to sell it. That we can call there is a MIS option while trading that we came to know. The next one is fifth one, momentum day trading. It is a method of stock trading wherein a trade is made when the stock is making a trending movement and the trade is closed at the end of the day. This is what. The last one is scalping or micro trading. That is not much important for the exam point of view. Is all about taking very small profits repeatedly. Typically, trades lost from seconds to minutes. Scalping is a trading strategy that attempts to make many profits on small price changes. Traders who implement this strategy will place anywhere from 10 to a few hundred trades in a single day in the belief that small moves in stock prices are easier to catch than large ones. This is what. Okay, now let us move to the next one, important terms in stock market and in stock trading. See, we can use some terminology in the stock trading. While trading in the stock market, we can use it. The first one is open. that it stand, I mean open, this terminology means the stock price in beginning of the day. I mean in the morning, exactly the market will start 9:15. What is the beginning of the price? That is we can call it is a open market. High is nothing but a the stock price reached at the highest level in a day. In a sim from morning 9:15 to up to 3:30. Okay, which was the highest, that we can consider the high. Low, it's opposite to the high. I mean the stock price reached the lowest level in a day. For example, if you buy an Infosys company share, today the share value is that live example what I am giving. Today the live market is on 678 rupees. It has started. It went 720 rupees. Again it come down 675 as of now. This is the one of the lowest level in a day that we can consider. After that, close. The close is the stock price at which it remains after the end of the market timings, or the final price of the stock when the market closes for a day. We can call LTP, lost traded price. That is what close. Volume is nothing but a quantity. Bid, the buying price is called as a bid price. Offer, the selling price is called as a offer. Offer is nothing but a selling price. Let us move to the very important concept that I think they may ask in a 14 marks in your exam. Trading and settlement in stock exchange or in stock market. There are three phases in secondary market or in the stock market transaction. The first one is trading, clearing, and settlement. The trading in the stock market, a large number of traders occur simultaneously. N number of the traders they occur in simultaneously. The stock exchanges use an electronic order matching system to match buy and sell orders from different traders. This way, each trade is executed. For example, you can imagine that stock ABC is trading in the stock market, right? So the way like that they are trading, the buy and sell order for this stock are as follows. If you buy 100, sell it 120 if the market increase, right? If the decrease, if you want, you can sell it based on the different tradings. That is what trading. Let us move to the clearing. Once two orders match and a trade is executed, when the buy and sell its match, a trade is executed, the clearing process takes place. Clearing is the identification of what security is owed to the buyer and how much money is owed to the seller. The entire process is managed by clearing houses. These are independent entities. Let us go to independent entities. For example, imagine that there are two traders, Mr. Lokesh and Ramesh. However, in the real market scenario, traders tend to conduct multiple transactions. As a result, the clearing house identifies all the transactions and the net amount or net securities owed to the trader are calculated. This is the clearing. Let us move to the settlement. Next step is very important. Settlement. The step in this step to fulfill the financial obligations identified in the clearing steps. This involves the transaction settlement for the buyers and the sellers. So once the buyer receives the security and the seller receives the payment, the transaction is settled. I'll repeat. Once the buyer receives the securities, in the same time the seller receives the payment for the securities, the transactions is settled. This is what settlement. That's why in trading and settlement in stock exchange there are three phases are very important: trading, clearing, and settlement. Let us move to the next concept. in trading and clearing and settlement, there are few participators in trading and settlement in stock market. Who are those participators? Here, there are few participators either in a Bombay Stock Exchange or in a National Stock Exchange. The first one is clearing corporations. Right, dear students, just you can understand while trading, clearing, and settlement, right, in all the process, these are all the very important participators. They have played a major role play while trading, clearing, and settlement in the stock market. The first one is clearing corporation. See, the clearing corporation is responsible for post trade activity such as risk management, clearing settlement of traders executed on a stock exchange. In India, 1995, National Stock Exchange introduced this clearing corporation. Right? In the first time, NSE has introduced clearing corporations, that is called NSCCL. It stands for National Securities Clearing Corporation Limited. I'll repeat, NSCCL, National Securities Clearing Corporation Limited. This states the responsibility of clearing and settlement process, right? NSCCL is the responsibilities of clearing and settlement the process. That is very important. After that, let us move to the clearing member. Clearing members are the responsible for settling their obligations as determined by the clearing corporation. This is what clearing members. Next one is the custodians. Custodians are clearing members, but very important, custodians are clearing members, but not trading members when the particular trade is assigned to them for settlement. Next one is clearing banks. Clearing banks are the key link between clearing members and clearing corporation. Members is required to open a dedicated clearing account with one of the designated clearing banks. After that, depository. Of course, depository is nothing but is an institution or kind of organization which holds the investor securities in the form of electronic mode. I mean, the depository system, it avoids the paperwork. I mean, it is a paperless work. Okay, that's why depository has started. uh, Depository holds, already told you, it holds the securities in dematerialized form for the investors in their beneficiary account. Each clearing members is required to maintain a clearing pool account with the depository. Example, NSDL or CSDL, National Securities Depository Limited. CSDL means Central Securities Depository Limited. The finally, professional professional clearing members. NSCCL, already I told you, right? NSCCL admits special categories of members known as professional clearing members. They may clear and settle trader executed for their clients. Example, individuals, institutions, etc. Okay guys, this is what, just let us go for the clearing and settlement process of a stock exchange, right? Clearing and settlement process of stock exchange process involves determination of what counterparties owe and which counterparties are due to receive on the settlement date. Thereafter, the obligations are discharged by settlement. The clearing and settlement process comprises of three main activities. They are clearing, settlement, risk management. Clearing, settlement, and risk management. The previous one we discussed about trading and settlement process of stock exchange. Now I am going to discuss about clearing and settlement process of stock exchange. Means after buying and selling of the shares, that clearing and settlement is the very major process on the stock market or the stock exchange, that I am going to discuss. We'll discuss through the one diagram. The following diagram or chart explain the clearing and settlement process at NSE, National Stock Exchange. The first one is, the first and foremost, trade details from all the trade details, whatever we can buy and sell, all the trade details from National Stock Exchange to NSCCL. Already I told you which is the clearing corporations, right? In National Stock Exchange, this is NSE, National Stock Exchange. In send trade details from NSE to NSCCL. What is the NSCCL, which we discussed in a previous slide? National Securities Clearing Corporation Limited. That is called NSCCL. Okay, first NSC send all the information details to the NSCCL. After that, NSCCL, this NSCCL notifies the consummated trade details to clearing members or the custodians. Look at here. Okay, it NSCCL that send all the trade details to clearing members or the custodian who affirm back based on the affirmation. NSCCL applies multilateral and determines obligations. Determines obligations. The next step number 3 is download of obligation and pay in advice of funds and securities. Step number 4, instructions of clearing banks. Instructions of, look at here, instructions of clearing banks to make funds available by pay in time. NSCCL clearly instruct to the clearing banks to make funds available by pay in time. Okay, that is what. After that, again NSCCL instructions to depositories to make securities available by pay on time. I mean, whatever the depositories to make securities available by pay on time. After that, pay in of securities. Here NSCCL advises depositories to debit whole account of custodian and credit its account, and the depository does it. That one. Next one is pay in of funds. Again NSCCL advises clearing banks to debit accounts of custodian and credit its accounts, and clearing banks does it. Next step is payout of securities. Payout of securities. NSCCL advises again depositories to credit pool account of custodian or clearing members and debit its account to the depositories. Next step is payout of fund. NSCCL advises clearing banks. Look at here, clearing banks to credit account of custodian or clearing members and debit its account, and clearing bank does its. The next step is depository informs custodians. This depository which holds the investor securities in the form of dematerialized, right? The depository informs custodians or clearing members. Depository informs custodian or clearing members through depository participant. Here depository cannot work itself because a DP can be worked and on behalf of the depository and investors. Depository participant is nothing but intermediate or dealing between the investors as well as depositories. Finally, clearing banks. Look at here. Finally, clearing banks inform custodian or clearing members. Finally, clearing after the depository, that clearing banks will inform custodian or clearing members to settle the process. This is the very important process or diagram or chart explain the clearing and settlement process at NSE. After that, the core process involves in clearing and settlement includes. What are the various core process involves in clearing and settlement includes? Trade recording. What it means? The trade recording the key details about the traders are automatically recorded in the electronic trading system of the exchanges. This is what trade recording. Here, all the traders are automatically recorded in the electronic trading system of the exchanges. Next one is confirmation. The electronic system automatically generates about trade like securities, their quantities, price, settlement, date by direct participants, etc. This is what confirmation. Next one, the dematerialization of obligation. It means the next step is determination of what counterparties owe and what counterparties are due to on settlement date. The next one is pay in. Uh, next one is pay out of fund securities. I mean, after processing for shortage of funds or securities and arranging for movement of funds from surplus banks to deficit bank through RBI, for that clearing corporation sends messages to depositories and clearing banks. The finally pay in pay in of funds. It means this requires members to bring in their funds or securities to the clearing corporation with the help of depositories. Yes, this is a very important topic which we discussed about trading, settlement, trading, clearing, and settlement. I hope all of you understood. Remaining will be continued in the next session. Thank you.